Alright, Friday PM session, I took 2 trades. I'm gonna run through it now on replay mode. This is a daily fair value gap, little gap we had left open on the daily chart. So you can see, let me put it slow. Alright, so you see this 15-minute chart. We came in and beautifully filled in this fair value gap. Right here on the 15-minute, this up candle. Yeah, came in. This is a shift in market structure. So I'm gonna drop down to the 5-minute chart here. This was a shift in market structure, and right after we filled the fair value gap. So line that out. We had a market structure shift to the upside right here. Clear these candles out. Right here, we took liquidity above this high as well. Now, alright. So now we're watching this. I'm going to move this out of the way. We're watching this, and here we come into the lunch hour. I'm going to mark this in from this New York time, 12 to 1 p.m. This is the lunch hour. Alright. So this was the lunch hour. Right after we come out of the lunch hour. Look, I want to take this range here, okay? I'm going to take this range here from this low to this high after we took liquidity here and filled this fair value gap here. This range, you look at this range. Now, this is a premium, this is a discount, simple stuff. Now, what can we see? We're looking for buys, okay? We're looking for buys because we had a bullish market structure shift. So we're looking for buys, and the whole AM session we were in a downtrend. We just came into a daily fair value gap. We filled it up. So now we're looking for buys. You can see we're in a discount zone right here. And right in this discount zone, there's this 1 5-minute fair value gap. Plain and simple. You can see it clear as day. Now right here, right as the price touches the top of this fair value gap, we want to enter. And we want to risk about 5 handles on this. Risking, if we put our entry here at 3956.5, and we place our stop loss at least under this candle that created the fair value gap, 3951.5, that is about 5 handles. 5 handles risk. Alright, let's play the next candle. Okay, we came in here. Let's put a buy here. We're in a buy. One contract, E-mini. Put a buy here as we tap into the fair value gap. Play the next candle. Next candle. I'm going to drop into the 1-minute chart now. So we can look at price as we're entering the fair value gap. Now look at this. Look at this, how we're in this 5-minute fair value gap here. You could have refined it more to this 1-minute one, but 5-minute will take that. It's more clear. 5-minute. See how price is respecting. Yeah, see how price respects the fair value gap. These wicks we don't care about because wicks are noise. Bodies are telling the story. The bodies of the candle are telling the story, and we can see the bodies of the candles are respecting this fair value gap. And you see how each time we come into the consequent encroachment, which is the 50 point here, middle of the fair value gap, see how the market's reacting. You see that? That is respect. That is beautiful price delivery there. And that gives me confidence in my trade idea because the fair value gap is being respected. Alright. So right now we're here, and RSL was here. Our stop loss is here. This is 5 handles. We're risking 5 handles only. Our stop loss is below here. And now watch. Play the next candles up. Boom. You see how price starts moving up? See that? And now this is the lunch hour. Normally, when the lunch hour happens, after the lunch hour, we will take the highs or the lows of what happened in the lunch. So if we put from here to here, what's the high here? Yeah, right here. This is the high of the lunch hour. We have this place here as well, but we want to target here. A run from this fair value gap to here, that's around 15 handles run. And that's all we need. That's legit all we need. 15 handles on one contract. That is a good day. Nothing more, nothing less. That's a good day. All right, let's play this out. I'm gonna put the speed up. You see, we came back down here as well. So after we came up here, there was, let me see. Yeah, price came back here, retraced back, and right here could have been another re-entry here on this fair value gap, the small one here. It came back and retested this fair value gap as well. So you could have got two entries. You could have taken one here, right, the first time I tapped it, or the second time I tapped it here. There was two opportunities. You could have taken a re-entry here as well. Let's see. Let's play price out. Alright, boom, right there. Price takes the lunch high, and that's where we sell. $700, one contract, 5 handles risk. That's it. That's all you need. Now I'm gonna jump back up to the 5-minute chart, and let's see what happens in the next few candles. Okay, after we take this lunch high, we start seeing some retracement. We have a 5-minute fair value gap here again, and now again we're going to do the exact same thing. We're going to take the 0.5 of this leg. Okay, I'll take this off the chart so it's not confusing. Take the 0.5 of this leg. All right, and we'll go back to the 1-minute chart. Now what's happening? We're looking for a buy at a discount. There's this high still intact. There's buy stops resting above here. Buy side liquidity. All right, buy side liquidity is there. This is a 5-minute fair value gap here. Now we take this range, this leg. Now where do we land in a discount? This discount zone lines almost perfectly up with this 5-minute fair value gap. It looks almost too good to be true. You see this? Two equal lows. Those lows are literally nearly exact. 3965, 3965. Bang. That is a straight line. The market likes to make these straight lines rigid. See that? That is a straight line. That people have sell stops here. So now we have some sell side liquidity, and underneath that we have a discount zone with a fair value gap lined up. This is almost perfect. See, price penetrates into this fair value gap, and what do? We hit another buy, and now where are we targeting? We can partial above this swing, and we can full TP here. Let's see what happens. Boom. You can take some partials here, right here. See this energetic run. Now, this happens when price is rapidly taking people on the market. Price wants to take people stops. And where the stops resting, you have stops resting here, but most importantly, we had stops resting here, right here, buy side liquidity. And this is right before, this is at around 250. We had this move around 230, which is a time where a macro starts for the algo, and we can see how the algorithm targets sell side, comes into a discount, taps into this fair value gap, and beautifully has an energetic run to the upside. Instant price delivery, no waiting around in consolidation. Bang! Look at that, instant gratification, no waiting around. Look at that run. We didn't have to sit there crying or in panic that my trade is gonna go the wrong way, or this and that, or blah blah blah. We had straight tap in, came in, boom, price rocked it straight back up, took the buy side, we take our profits, and that's it. Look, 1700 USD in what? Let's say we put our first thing here at 1 to 257, so 2 hours, and all we did was press 4 buttons: buy, sell, buy, sell. That's it. One contract only, risking no more than 5 handles. It's that simple. As you see, we tap through this buy side liquidity, and then you're out of the market here, and then the market ends up retracing back down, making equal lows here, and then we close for the week. That's it. That's how easy it is. If you follow rules, you have discipline, it's easy money.